Good afternoon, everyone. My name is Yasmina Slimani. I'm the CEO and founder of Elysian Wealth Ventures. We've built the first private by design global finance app to help international people and their advisors get the visibility and the insights of their wealth cross border in a very efficient way whilst keeping their data private. A lot of what we've been doing has been sharing the insights and approaches that family offices typically use. And therefore, I couldn't think of a better person today than Michel Mert to join us. And just to give you a bit of background, Michel and I used to work together at HSBC. We met a few years ago at HSBC Global Asset Management here in London. Michelle has been a very strong supporter, if I may say, an advisor to Elysian, and he brings with him a wealth of experience in the family with working with family offices. So, without further ado, I'll turn over to you, Michelle.
Yeah, with pleasure. Thank you very much, Jasmina. Yeah, let's talk a little bit about my background, what I did over the years, and indeed it was a pleasure to meet you years ago at HSBC Global Asset Management. I started a long time ago now as a portfolio manager and analyst in the investment department of an insurance company. And I stayed there for more than 10 years, working up to level of chief investment officer for the Benelux region. And it was great. After that, I worked for a number of years as a CIO with a wealth management organization, a private bank. That was in Luxembourg. And after that, I changed my career a bit by becoming an investment consultant. And that's what I have been doing most of the time since 2008, with the exception of the few years I was at HSBC. So, as an investment consultant, I have been working very quickly with family offices, both in Europe and also in the Middle East, quite a lot. And that was really very new to me, to be honest, and very new to the firm I was at that time working for as well. But we learned a lot, and we learned about a different world. The world of family offices is very different from the world that the investment consultants are dealing with, which is mainly pension funds, or was mainly pension funds at that time. And now again, my role, I'm working at Mercer Investments since a bit more than a year now, where I'm the European consulting leader for endowments, foundations, and family offices. The reason why this is all combined, endowments, foundations, and family offices, is because they have one thing in common, which is that they are really very long-term investors, truly long-term investors, and that's a big difference compared to, for instance, pension funds.
Obviously, we work with businesses, but we also have some individuals that follow us that use our app. And sometimes when I use the word family office, it's not always very clear what a family office is. So would you mind in very simple ways maybe describe what a family what it is? What is a family office?
Well, there is no clear-cut definition of a family office, let's say, but let's put it this way: that it is, in fact, a privately held company, so an institution for a family or for family members, that is dealing with the wealth and the investments mainly of that family and the members of that family. That's a kind of definition you could use, and you have different types as well. So you have the typical single family office that is dealing with the members of one family. You also have multifamily offices working for different families at the same time, and you have the type of institutional family office where a private bank or a tax advisor or any other type of advisor is setting up a family office service um, for their clients.
Could you highlight some of the key benefits, maybe of, and some of the things that you may see in family offices that we may not see in other, I guess, when you're not at that family office level yet?
Well, I think it's cause a bit of the secrecy and keeping everything inside, which is a very important element for a lot of families. The alternative is often just to work with a private bank, and then you're just a client. You don't do exactly what you want. You can't always structure your investments as you wish. So it gives a lot of flexibility. It gives you the secrecy you need, and um, working really with the members of your family you want to work with, and have a common strategy in place for everyone, and use that as an advantage in terms of scale, of course.
Yeah, and you were touching on a point that is really key to us, which is that secrecy. And it probably one, if not the first, one of the first reasons that we decided to, or problem we decided to tackle with our app, which is around the privacy, the confidentiality, and really going alongside with that secrecy. Typically, do you have an idea, or could you give us an idea of the, like, who would qualify for to receive or to get their own family office?
It's very simple because there is a cost attached to having such an organization. You need to have yeah, the company in place. That's not very costly, but you need to have the right people, employ the right people, have the right systems, etc. And that can cost quite a lot of money. So as a rule of thumb, I would say that anything under 150 or 200 million is not worthwhile having a family office. You need to have that amount of money altogether before you can really think of establishing a family office um, in a financially yeah sensible way. Let's put it this way.
Yeah, and one thing that we've noticed, and one of the reasons we're also um, focusing on helping mainly international individuals and working with their advisors, is that one thing we found is that there are a lot of people that do require those type of services. However, hitting a threshold of 150 to 100 million assets is quite a high one. So it's really how can we help all the people who are underneath that, and really the reason why we are here, why Elysian Wealth is here. Could you just maybe share some of the approaches, high level, of course, about investing within family office services?
Well, I think what is important is just to think about what is the purpose of the family office. What do they want to achieve in terms of their investments and the returns of their investments. Um, you could say that for all family offices, it's always somewhere in between two objectives. One is capital preservation, and the other one is growth of the assets of the asset pool. And some family offices will lean much more towards the preservation of capital as a main objective, and others will much more be focusing on growth. It depends also on which generation you are on. If it is the first, the second, or third generation, that can have an influence on the main objective they have. So I think that's important in terms of how investments are being built. But an element, as I said before, and you mentioned it a few minutes ago, is the long-term aspect, which is typical for family offices. It's typically multi-generational, so really long-term compared to other asset owners, and that gives them an enormous advantage that they can access um, or easily access some type of investments that are more difficult to hold for other asset owners. Think, for instance, at the situation of some of the pension funds in the UK, quite a lot of pension funds in the UK who were investing in private equity and had to sell their assets a few years ago just because they couldn't keep that type of investments with a long-term time frame, while asset owners like family offices really can hold a lot of illiquid assets in their portfolio, and that's an enormous advantage because they can capture an additional premium for that illiquidity of the portfolio or part of the portfolio, and that means that when you look at portfolios of family offices, very often you will have an enormous allocation to asset classes like real estate, like private equity, very often in direct investments as well, but also in funds. And they will, by definition, capture a higher return than other asset owners because of that.
Great. And if we step back in, so you talked about some, the type of objectives that they typically have, the timeline of their investments, and also the type of investments that they may invest in. If we can take a step back on getting like the approaches before they even start going into the investments, getting the understanding that they need when their assets are across multiple countries, multiple asset classes. How does that typically work? And the importance also of doing that. Um,
Well, I think it's not always like that, but ideally, a family office should really think about what they want to achieve in terms of return, what type of risk they want to take, and that has consequences on or interaction with the asset classes they want to play with and the others they want to exclude. But it's also very important to define the real convictions they have. So we would call that typically the investment beliefs they have. Each investor and each organization even has investment beliefs. Very often they are not documented. That's the problem. So helping an organization with documenting those beliefs is an important exercise because then you are forced to really get much better focused as an organization in terms of your investments, because the investment world is that wide, that large, that you can't follow everything, especially typically in a family office. A small investment team is working in-house. With a small team of 5 or even 10 people, you can't cover all types of investments and all investments in the world. That's really too large. So you can use advisors, of course, but you need to be focused. And very often you see families who, for instance, for their real estate, they like to keep it closer to home. And for private equity, which is a large chunk of their assets, they develop a strategy based on a number of sectors uh, they think they are good at, or they would like to focus on because of the future return perspectives, or the impact it can have um, on other groups in society as well. We can come back on that theme later on. But that's an element which is important to define your beliefs, and that can really help to be better focused and not to disperse your investment team into everything and not doing anything in a deep and good way. It's important to be focused.
looking at some of the trends this year, what are you seeing?
Well, I think, yeah, in terms of trends, there is one element which is already ongoing since a few years. Inflation is back. Inflation was completely forgotten, and inflation is a very important element for the type of investors I'm working with. So, not only family offices, but also endowments and foundations. Whenever you have really a long-term investment perspective, inflation can really eat your capital very, very quickly. I remember the years we had recently with inflation, which was uh, very, very high single digits. Well, that's a disaster for a portfolio. You're not managing it very well. Um, so that's one element. Focus on inflation is again a focus for family offices. Secondly, and it's linked to inflation, of course, with interest rates that is again at a level which is interesting for investments. There is a shift in portfolios. Fixed income was a bit forgotten. Let's put it this way, and it's getting back into portfolios. For this type of investors, it can be also more in the private space, so private debts, but debt anyhow. And there are opportunities in fixed income um, um, that were not present during the previous decade, let's say. So portfolios are getting a bit reshuffled. It's a good moment to rethink your strategic asset allocation and take this into account. I think that's really important. On the other hand, there are always long-term themes you should focus on. And this is again linked to beliefs. You can have beliefs about what's going to happen in the world in the next decades and structure a portfolio based on that.
That was extremely helpful. Thank you so much, Michelle. And for me, it was really good also to be able to share with our followers a bit more details about what a family office is, how they typically think, how they typically work, but also having an understanding of why, how, by what we're doing with Elysian, we are trying to democratize family office services. And it's really by bringing this type of approach, being very bringing those global holistic views, that understanding that you need before being able to make decisions, that level of secrecy we were talking about, that privacy aspect is very key. But really interested, it was really interesting to hear about the different trends that you're seeing for for 2024. With that, is there anything else you would like to add, to share?
Well, I think coming back to inflation because it's a very important topic we are discussing day after day with clients since more than a year now. I think the fact that family offices are by definition already more focused on real assets, real estate being an important part of the portfolio. And in a way, when you invest in the real economy, in equities, you have some inflation protection as well. So I think that's an important element. People always think that gold can be an inflation hedge. I don't think that is the case. Gold can help for a lot of distressed um, situations in markets, but not really on inflation. Hyperinflation, yes, but not really inflation. But okay, you see quite a lot of families who keep a little bit of gold as well, just in case. And I think it's a very healthy decision. final point maybe is the fact that yes, some families they are very different. I said in the beginning, and I would like to finish with that. Um, you see families who like to have a lot of diversification in their portfolio and cover different asset classes, and within each asset class have a good diversification as well. And then you have the other extreme with families who like direct investments and have a limited number of investment objects, let's say, or investments in their portfolio, and like that concentration, and are really very hands-on in terms of helping the management of those companies, for instance, in creating value. Um, so very different approaches you see, but that's the beauty of this segment. Family offices are very different. I think you will always say starting working or discussing with a family office. Well, this time is again very different.
We've had many conversations around that, and it's true that whilst you may have a lot of similarities, when you look at other types of companies, there is not one way, one single way to describe family offices. And but you, this was very helpful, and I think that for people who don't know anything around family offices, at least now they have a better understanding. And that's thanks to you, Michelle. So thank you again for your time. I'm following this conversation. We may have to do a few more series because I have some more subjects that have come through my mind. I'm just mindful of time for today. Um,
With pleasure. It was a pleasure to discuss this with you. I recall very well the first discussion we had when we were at HSBC with a coffee, and that was the start of your venture with Elysian Wealth.
Yeah, you've been here from the very start, and you were our first member on the advisory board. I still remember sending you that message not long after. But yeah, so thank you so much, Michelle. It's been a pleasure, and thank you all for following us. And if you have any questions or would like to find out more, do contact us. Have a good day. Thank you.